Welcome back, everybody. My name is Tank. Today is the 24th of January, 2022. In this video, I want to talk to you guys about where I think a possible bottom might be in the stock market and in the crypto market going forward. I want to give you guys my thoughts after doing a lot of research over the past couple of days on where I think we could possibly be seeing a bottoming happening on these charts. But before I do, if you guys would help me grow on YouTube by liking this video and subscribing to the channel. Not only are you being a great supportive person when you do subscribe to my channel, but you could also possibly win yourself a 50-inch flat screen TV and or MSI 2060 GPU once we hit 1,000 subscribers, because I'm giving away both of those prizes to 2 lucky individuals absolutely free. It doesn't matter where you are in the world. All you have to do is be a subscriber. Once we hit 1,000 subscriptions here on YouTube, I'll ship it to you guys absolutely free. So do me a favor, do yourself a favor, do everybody a favor, like the video, subscribe to the channel. With that being said, guys, let's go ahead and jump on in to the topic at hand now. Like I said, I want to give you guys my thoughts about where we could be seeing a possible floor if we keep seeing selling pressure come on into these charts. Now, a lot of people are really fearful right now. I get it. There's a lot of geopolitical things happening. There's a lot of things happening in the world that we have to account for. There's a lot of really uncertain things happening, scary things happening right now in the world. And I think a lot of people are just responding in turn to those events that are actually happening right now that a lot of people might not even know about. If you guys don't know, there's the concern of war possibly breaking out here shortly. There's also the concern, like the Feds have been saying, about inflation. There's also the concerns with the virus. There's just so many things actually happening. On top of all of that, we have elections happening here in the US, and that always brings uncertainty for investors. So there's a lot of things happening right now that are causing this market shift to the downside recently. So I wanted to talk to you guys about where we could possibly be finding a floor if we do capitulate and if the selling pressure keeps going, guys. Because a lot of people are saying that this is it. This is all it. No, things are going to go to the floor. It's all going to die. And I want to just kind of give you guys my thoughts, if you're in the market like myself, on where that possible floor might be. Now, I do want to reference to you guys, I'm not trying to tell you for sure at any given time ever in any of my videos of where an absolute floor is going to be. I'm never going to tell you like this point right here on the charts is exactly where the floor is, because anybody that tries to tell you that, whether it be the floor or the top of any chart, they're lying to you. Nobody knows, and nobody can tell the future on these charts. All we can do is go by previous data and price action in the past and what patterns have looked like in the past when we've dealt with similar situations. And that's all we can do as investors and our traders. And that's what I've been doing over the past couple of days. And I just wanted to share with you guys something really interesting that I found and what I think is pretty much a really good indicator of where a possible bottom might be going forward. Now, again, guys, so just keep that in mind. I'm just saying this might be where you want to start DCAing, or this might be where we might actually find some kind of relief or support if you guys are already in positions. Now, a lot of people are actually, really overextended. Some people have been leverage trading. Some people are like, oh no, should I take my money out of the game right now? What should I be expecting? So that's the whole purpose of this video, guys. I just want to share with you guys my thoughts based on math and based on previous price action in the past on all of these charts. And that's how I drew my conclusions on where the bottom might be around. Again, it could fall a little short and it could go a little past my conclusion, but I think it's a really good place based on my homework to share with you guys. So let's go ahead and just jump on into it. So the first thing we're going to take a look at is the Dow Jones. We have to take a look at the traditional market because in the crypto market, we're still correlated to it. When it dumps, we're going to dump, and vice versa, guys. That's just the name of the game. That's the way it's going to be for now. And so we got to start with the Dow Jones, guys. We're on a daily time frame just for reference, and I'm still using Market Cipher as my primary oscillator and indicator tool of choice. And what I did over the past couple of days was I basically, I wanted to know how far on average we went after breaking the 200 SMA. Now, just so you guys can follow along, the 200 SMA is this yellow line right here. That's represented on all of my charts as the 200 SMA. So keep that in mind as we go forward. And again, what I wanted to know was how far down did we go on average after breaking the 200 SMA on all of these charts? Now, the reason why I chose to measure it after breaking or losing the 200 SMA is because I wanted a point of reference on all of my charts that remained consistent. I didn't want to take it from the top of any kind of price movement for any of these charts and then measure it all the way down, because that's not going to be a realistic or that's not going to show a true indicative movement in the charts for all of the charts when you average them, right? So you got to take some kind of sticking point or point of reference on all of the charts that's the same, which I chose to be the 200 SMA, and I used that as my starting point for all of my measurements. So that's why I did that, just so you guys know. So I measured going back the past 10 movements that were significant breaks of the 200 SMA, and I measured out, and I came to a realization that a lot of them actually had a lot of things in common when it came to the individual different charts, like the Dow Jones, the SPX, and the NASDAQ, and so on and so forth. A lot of them had similar properties when it came to this average, and I'm gonna share that average with you guys right now. So let's go ahead and share that and let you guys see what that looks like. So what I did was I just went ahead and measured it, like I said, and measured significant price movements to the downside after breaking the 200 SMA. Now, I didn't do every single break or when we threaded through. The measurements that I took had to have certain factors, like they had to have been below the 200 SMA for about 30 days or so. So there was a couple of things that had to be met before I actually used that as a measurement. But yeah, so I took the ones that did meet all those requirements and I measured them out. And what I found, if you guys can see here, I went back pretty far. It was actually back 20 plus years. I went all the way back here with the 10 measurements. This is the line where I stopped here. What I found here going all the way back to 2001 was the average move, even though all of them were significantly different, because keep in mind, on all of these charts, the reason why we saw dumps were all for different reasons. Now, again, I didn't go into detail on putting it on there, but it could be, just for an example, political changes in any country or environment, right? Like we could have had elections in Europe, we could have had elections in the States, we could have been faced with war at that time, or the housing market could have took a dive, or for whatever reason, all of these movements to the downside were all different. They all don't get made for the same reasons, right? If it was that easy, we'd all be super rich. So keep that in mind as we're looking at. So the average between all of these that were all different dumps, even though some of them were a lot more scary than others, came out to be, let me share it with you guys right here, 20.99%. The total average move down once the 200 SMA is broken over the past 10 breaks, over 20 plus years. Now, I thought going back 20 years was a good amount of time for us to use. Now, I didn't want to go back too far because, of course, things change in the market. Technology changes in the markets. Environments change. And like I said, geopolitical things also change, and just civilization change. So the markets, in a sense, are living and breathing. They change with time. So I didn't want to go back and use anything past 20 years because that really wouldn't give us, again, a good picture of anything relevant or being correlated to the current time, right? Like we can't go back and talk about, TVs or the market for TVs when TVs were first invented versus to where they are now. There's two different markets. It's two different things. So much things have evolved when it comes to TVs. Now I'm just like using TVs as I don't know if it's the best example, but I'm just using it as an example. But you guys get what I'm saying. Things are so much different 20 years ago to what they are right now. I didn't want to go back too much further than that. But so as you can see though, 20 years, good amount of time, 20.99%, which is basically 21%, brings us down to 27,638 on the Dow Jones chart. Now, if we dump down further, if we go to war, if things get really, really hairy, if we really do, if people are absolutely right and we actually see a market correction, I'm not saying that this is where we're going to find the absolute stoppage or the bottom of the floor, because like I said earlier, we could go further than that and we could fall short of it. We could actually stop before hitting this average. But for anybody that wants to know where a possible good place to maybe start deploying capital, maybe to start DCA strategizing again, or maybe to start looking for, some relief in their portfolio if you're just going to stick it out. I don't know. You do you, right? This isn't financial advice. You all have different situations, different strokes for different folks, for whatever the reason might be. This is just a really good place to eyeball on the charts for the Dow Jones. If we do capitulate, if we do see ourselves going down further, look for right around there on the charts, which is about 21% from when we broke. We already broke the 200 SMA on the Dow Jones. And right now, to be honest with you, this is a kind of hard pill to swallow, but again, this isn't exactly accurate. But right now, guys, we're not even 3-point-something% down from the 200 SMA. We could go a lot further. We technically could go a lot further if we actually have a significant break down and, the powers that be actually let it happen for, whatever XYB reason they decide to let it happen. We could go down to about 21% before finding some kind of bottom signal actually happening, or bottom action start happening on the charts. We could go a little bit further than that, like here, guys. We could see something like this where we go wick down below, and then we kind of just, range here, find a relief, wick down below, range here. It could happen. I'm not saying exactly this is it, but this is a good average to think about. So I know there's a lot of people out there right now, and again, they're all good technical analysis, they're all good chartists. If they haven't been taking this kind of information in their approach or in their thesis of where a bottom might be, I'm not saying ignore them, but look for other things to add to their thesis or their thought process, because then that's just kind of like a lot of hopium, right? If you're not using an average like this, you're really just feeding a lot of people hopium, in my opinion. You're just feeding them your bias or like your thought process, which, let's be real, emotions and thought processes can be diluted. They can be jaded. Numbers and previous price action don't lie. Math doesn't lie. This is the average. Like, math doesn't lie. This literally could be a really good place for you to start DCAing, not financial advice, just letting you guys know. So again, on the Dow Jones, look for about 21% from the break on the daily time frame to be a place for us to start DCAing, or maybe finding some kind of relief if we do capitulate. We might not. This could just be all posturing in the world right now before, just turning on the money printers and being on our way again. Who knows? But I wanted to share that with you guys. So that's the Dow Jones. And now that we basically explained everything, this will be a lot quicker as I go through the other charts here. Let's go on over to the US 100, which is the NASDAQ charts, guys. Again, same principles. We just took the same thing, the same ideas, the same thought process, and we applied it to this chart. Over the past 10 moves, which was, again, over the past 20 years or so, we can see an average move to the downside after breaking and not holding the 200 SMA on the US index, the US 100 index. We can see a downwards movement of 26.27%, which would bring us all the way down to 11,154 on the charts. If you guys are into this index, that's where I would be looking for some kind of relief or start deploying more capital. Again, guys, you do you. Everybody has their own, strategies when it comes to investing. I'm just letting you guys know what I found. The SPX, this is one that I'm paying attention to a lot more because this is more tech heavy when it comes to the traditional market, excuse me. So it's going to be more correlated to crypto because, crypto's tech stuff. But as you guys can see here, same principle, same thesis, same process was applied. 21.81 total average move down once the 200 SMA is broken over the past 10 breaks. Again, 20 plus years, somewhere around there, give or take. That's a pretty good amount of data, and I think holds a lot of weight on the charts. But if we come down, I've already measured it, guys. You can see that would bring us right around here, which would be $3,472. That is the S&P 500 index. Again, I think that has a lot more to do with crypto than the rest of the traditional markets because it's more tech heavy. So I'm kind of looking at this when I'm going forward with my crypto holdings as well, as a second or maybe third signal or tool for me to give me further confirmations in my charting in crypto. Speaking of crypto, though, let's go on over to Bitcoin. Now, this is something really, really interesting. Okay, so the average move down, because we don't have 20 plus years for Bitcoin, and again, even on these charts, they're kind of they're shortened, and you can only go by certain charts. It goes back a little bit further, right, in the dark web, and when it was being traded on on the dark web and stuff like that. We weren't even charting it back then. But from the information that we do have, this is what I've gotten for you guys. So the average move after breaking the 200 SMA, going back, this isn't 20 years. Like I said, this only goes back to 2011, I think. You can see it comes down to 36.45% after breaking the SMA. Now, we've already broken the 200 SMA, and that line is right here, which actually kind of matches everybody else's thought process of $29,000 to $30,000 is a good level of support. So that actually does line up as far as maybe finding a bottom on the charts. Now, I know there's a lot of big buys and a lot of big people have gotten in around that price point. I don't think, just based on previous price action, previous cycles, and how Bitcoin's acted in the past, that we will see Bitcoin. Maybe it does. Maybe it goes down just for a wick or two really quickly past $29,000, $28,000. But I don't think it's going to stay there very, very long. We could wick past it. Like I said, not financial advice. We could not even come all the way down. We could fall short, or we could go a little bit past it. But this right here is another really good place for people to start considering DCAing. Now, that is on top of recent price action, which is simple TA. It just all lines up to that $29,000 to $30,000 being our ultimate level of support. It's held up before in the past over the summer. No reason why it shouldn't hold up going forward. Again, guys, and then you think about in previous cycles, we've never gone below previous highs during our previous cycles. Again, a lot of previous's there. So again, our previous, again, we could come down here, which is, what is this here on the charts, guys? This is, let me measure that out actually. That is like what, 20,000? Like we could wick down there really, really quickly, but I think the buying pressure that'll be anywhere between 20 to 28, 29 is going to be really, really high. I think it's going to be like overwhelmingly stronger than any kind of selling pressure around there. And I think people who are selling know that. So just to kind of give you guys my thoughts about Bitcoin going forward, I think it lines up quite well with what people have been saying. 29, 28 to 30,000 is a good level of support for many, many reasons, guys. With that being said, let's go on over to Adam, because you guys know I'm a Cosmos bull and I've been ranting for such a long time already. I just want to get this video over with. Adam holding up really, really well, guys. We haven't even broken our 200 SMA yet. We haven't even broken our 200 SMA. So if you're a cosmonaut like myself, guys, do me a favor, like the video, subscribe to the channel, support a fellow cosmonaut, guys. The 200 SMA holding up really, really well. I've been saying it time and time again. I'm super bullish on the Cosmos ecosystem. I think a lot of other people are now waking up to the fact of what's happening behind the scenes for the Cosmos ecosystem going forward. If you guys want to know what that's all about, go check out my playlist down below. I think 2022 is going to be the year. But yeah, guys, let's just say, the market drags us down with it, because, no matter how bullish we are, if all of the markets go down, we're going down with it somewhat. If we break our 200 SMA, guys, expect 39.17% to be the average move down. That's where I'm going to be DCAing. And it just happens to line up with the same thing I've been sharing with you guys for some time. This upwards trend line that we have that's been holding up so far as support. It lines up exactly right there on that trend line. Crazy, huh? That's crazy. I've been saying that for a long, long time, and it just happens to line up. So again, guys, if we come back down there, look for right around $17 to $20 to hold up as support. Again, we don't even necessarily have to come down there. That's just the average that we've seen us break down after failing that 200 SMA in the past. That's what I got, guys. I hope this was beneficial. Please do me a solid. Like the video, subscribe to the channel. With that being said, stay in profits. Peace.